Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel @Accounting Buddy NB. Today's video is a 60 plus question and answer session in which we will test and strengthen your understanding of the most important accounting principles, accounting concepts, guiding rules, GAAP, IFRS, and accounting standards through a carefully structured series of questions and answers. This lesson covers critical thinking questions, short answer questions, one word answer questions, business scenario based questions, and true and false questions. So sit back, relax, and watch the full video till the end. Question number 1 on your screens is, what are accounting principles? The answer is, accounting principles are the rules and guidelines that companies follow when reporting financial data. Question number 2, what is the purpose of accounting? Answer, the purpose of accounting is to provide a clear financial picture of an organization for decision making, reporting, and compliance. Question number 3, what are the fundamental accounting equation? Fundamental accounting equation is assets are always equal to liabilities plus equity. Question number 4, what is GAAP? GAAP stands for Generally Accepted Accounting Principles, which are the standard framework of guidelines for financial reporting. Question number 5 is, what is IFRS? IFRS stands for International Financial Reporting Standards, which are designed to bring transparency, accountability, and efficiency in financials worldwide. Question number 6, what is the revenue recognition principle? Answer, the revenue recognition principle states that revenue should be recognized when it is earned, regardless of when the cash is received. Question number 7, what is the matching principle? Answer, the matching principle requires that expenses be matched with the revenues they help to generate in the same accounting period. Question number 8, what does the cost principle state? The answer is, the cost principle states that assets should be recorded at the historical cost and not at the current market value. Question number 9 is, what is the full disclosure principle? Answer, the full disclosure principle requires that all the relevant financial information be disclosed in the financial statements. Question number 10, what is the going concern principle? Answer, the going concern principle assumes that a business will continue to operate for a very long period of time. Question number 11, what are the main financial statements? Answer, the main financial statements are the balance sheet, income statement, cash flow statement, and the statement of changes in equity. Question number 12, what does a balance sheet shows? A balance sheet shows a company's assets, liabilities, and equity at a specific point of time. Question number 13 is, what is an income statement? An income statement summarizes a company's revenues and expenses over a specific period, showing profit or loss of the business. Question number 14, what is a cash flow statement? Answer, the cash flow statement provides information about the cash inflows and cash outflows during a specific period. Question number 15, what is the statement of changes in equity? Answer, this statement shows changes in the ownership interest in the company, which includes new capital investments and retained earnings. Question number 16, who sets GAAP? GAAP is set by the Financial Accounting Standard Board FASB in the US. Question number 17 is, who establishes IFRS? The answer is, IFRS is established by the International Accounting Standard Board, popularly known as IASB. Question number 18, what is the role of the Financial Accounting Standard Board FASB? The answer is, the FASB is responsible for establishing and improving financial accounting standards in the US. Question number 19, what is the International Accounting Standard Board IASB? The answer is, the IASB develops and publishes IFRS to provide a global framework for financial reporting. Question number 20, what is double entry accounting? And the answer is double entry accounting is a system where every transaction affects at least two accounts, thereby maintaining the accounting equation. And we know that the accounting equation is the total assets of the business are always equal to its liabilities and owner's equity. Question number 21 on your screens is, what is a journal entry? Answer is, a journal entry is a record of a financial transaction in the accounting books specifying accounts affected and the amounts. Question number 22, what is a ledger? The answer is, a ledger is a collection of accounts where all the transactions related to each account are recorded. Question number 23. What is a trial balance? The answer is, a trial balance is a report that lists the balances of all the ledger accounts to ensure that the total debits equal total credits. Question number 24. What are adjusting entries? The answer is, adjusting entries are made at the end of an accounting period to update account balances before preparing the financial statements. Question number 25 on your screens is, what are current assets? The answer is, current assets are assets expected to be converted into cash or to be used for the manufacturing of the finished goods, which are again meant for sale within a period of 1 year, such as inventory and accounts receivables. Question number 26. What are non-current assets? The answer is, non-current assets are assets that provide value over a longer period, typically more than 1 year, such as property, plant and equipment. Question number 27. What are current liabilities? The answer is, current liabilities are obligations that a company needs to settle within 1 year, such as accounts payables and short-term debts. Question number 28. What are non-current liabilities? The answer is, non-current liabilities are obligations that are due beyond 1 year, such as bonds payable or long-term loans. Question number 29 on your screens is, what is depreciation? The answer is, depreciation is the allocation of the cost of a fixed asset over its useful life. Question number 30. What is owner's equity? The answer is, owner's equity represents the residual interest in the assets of a business after deducting liabilities. Question number 31. What is retained earnings? The answer is, retained earnings are the accumulated profits that have not been distributed to the shareholders as dividends. Question number 32. What is a dividend? The answer is, a dividend is a distribution of a portion of the company's earnings to its shareholders. Question number 33 is, what is an investment? The answer is, an investment is an asset acquired with the expectation of generating income or appreciation in its value. Question number 34. What is an audit? The answer is, an audit is an independent examination of financial information to ensure accuracy and compliance with the accounting standards. Question number 35. What is internal control? The answer is, internal control refers to processes designed to ensure the integrity of financial reporting and compliance with the laws and regulations. Question number 36. What is materiality in accounting? The answer is, materiality refers to the significance of financial information determining whether it could influence users' decision. Question number 37 is, what is the significance of IFRS adoption? The answer is, IFRS adoption promotes consistency and comparability in financial reporting across international borders. Question number 38. What is the role of the International Accounting Standard Committee IASC? The answer is, the IASC was responsible for developing international accounting standards before the establishment of the IASB, that is International Accounting Standard Board. Question number 39. What are the implications of non-compliance with accounting standards? The answer is non-compliance can result in legal penalties, financial loss, and damage to a company's reputation. From question number 40 onwards, we have few one-word answer questions. Now, question number 40 is which principle states that the businesses should record their expenses in the same period as the revenue they help in generate? And the answer is matching principle. Let us address a couple of more one-word answer questions. Question number 41 is, according to this principle, assets should be recorded at their cost rather than their current market value. The answer is cost principle. Question number 42, this principle requires business to report financial information consistently over time. The answer is consistency principle. Question number 42, according to this principle, companies must disclose all significant information in their financial statements. The answer is full disclosure principle. Question number 44, this principle requires business and business finances should be separated. The answer is business entity principle. Question number 45, this principle implies that revenue should be recognized when they are earned regardless of when the cash is received. The answer is revenue recognition principle. Question number 46 on your screens is, this principle suggests that expenses should be recognized when they are incurred and not when the cash is paid. The answer is accrual principle. Question number 47, this principle requires that financial statements be prepared using the same accounting methods and policies from one period to the next. The answer is consistency principle. Question number 48, this principle allows for the use of estimates in the financial reporting process when exact figures are not available. The answer is conservatism principle. Question number 49, this principle refers to the concept that a business is assumed to continue operating indefinitely unless there is an evidence to the contrary. The answer is going concern. Question number 50 on your screens is, which accounting principle requires that the life of the business be broken into smaller parts? The answer is accounting period. Question number 51, Mr. Tolley purchased a garment retail showroom at a total cost of $500,000. At the end of the accounting period, the value of the showroom appreciated to $600,000. Mr. Tolley recorded the showroom value at $600,000 and booked a gain of $100,000. Is he correct in treating the increase in the value of the showroom? The answer is no, Mr. Tolley is not correct. As per cost concept, the asset should be recorded at the actual price paid. Therefore, the showroom should continue to be recorded at $500,000. Question number 52, office rent of $2,000 for December 23 is not paid. Under which accounting concept it should be recorded as expense for the accounting period December 23? The answer is accrual concept. Question number 53 on your screens is, why the life of a business is divided into periodical intervals? The answer is, the life of a business is generally divided into a span of 12 months called the accounting period, so that the profit earned or the loss incurred by the business can be ascertained at regular intervals. Question number 54, capital is a liability of the business. Explain the statement with applicable principle. The answer is, according to business entity principle, business is a separate and distinct entity from its owners. Therefore, only business related transactions should be recorded in the books of the business. The amount invested by the owners is recorded in his capital account and is considered as money owed to its owners by the business. The amount lying in the credit of the capital account is a liability of the business towards its owners. Question number 56 on your screens is Mr. Toley's business had a massive labor strike starting from 5th of October 2023 and lasted for 3 months. During this period, the company lost huge business to its competitors. The company has not disclosed this fact in their financial reports for the year ending December 23. In this case, which principle is not followed by the company? The answer is by not disclosing this important fact, the company has not complied with the principle of full disclosure. This is a significant event which has severely impacted the sales and the profitability of the business and should have been disclosed in the financials of the company. Question number 57. Under which principle the resignation of a HR manager is not recorded in the books of accounts? The answer is money measurement principle. Question number 58 on your screens is how does matching principle apply to depreciation? The answer is according to matching principle, the business expense for an accounting period are matched against the related revenue for determining the correct profit or loss of the business. On account of this principle, the purchase price of the fixed asset is not charged in the accounting year in which the fixed asset is purchased, but only the depreciation on the fixed asset related to the accounting period is considered to calculate the profit or loss of the business. Now let us take true or false question and answers. Question number 59 on your screens is the revenue recognition principle states that revenue should be recognized when it is earned regardless of when the cash is received. This statement is absolutely true. Question number 60 on your screens is the matching principle requires that expenses be matched with revenues in the period in which the revenue is earned. This is a true statement. Question number 61. The cost principle states that the asset should be recorded at their fair market value at the time of acquisition. This is a false statement. Assets are recorded at their historical cost. Question number 62. The going concern assumption indicates that a business is expected to operate independently without the intention of liquidation. This is a true statement. Question number 63. The conservatism principle suggests that accountants should choose methods that result in the highest net income. This is a false statement. The accountant should choose the methods that are least likely to overstate assets or income. Question number 64 on your screens is the consistency principle requires that the companies use the same accounting method from period to period. This is a true statement. Question number 65. Verifiable objective principle ensures that the accounting is free from personal bias. This is again a true statement. Question number 66. Capital contributed by the proprietor is credited to his capital account. This is absolutely a true statement. In my next lesson video on 13th June 2026, we will explore one of the most important foundations of accounting, that is the basis of accounting. We begin by understanding the difference between the cash basis of accounting and the accrual basis of accounting and why businesses around the world rely on accrual accounting for financial reporting. Through practical examples, we explain when revenue should be recognized, when expenses should be recognized, concept of accrued revenue and accrued expenses, treatment of advance receipts and prepaid expenses, and much more. We also compare cash basis and accrual basis side by side to help you understand how each method impacts financial statements and business decision making. The lesson concludes with a focus on question and answer session to reinforce your understanding. If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel @accounting buddy NB. Thank you and goodbye for now.